Hello everyone, welcome to a new video for FET price prediction based on Elliott Wave analysis. Don't forget to support this channel with a like and subscribe, of course, for more updates, and leave your comments and questions below. I would be glad to answer. Starting with the FET on the daily chart, we have two scenarios, of course, between bearish and bullish as usual. In FET, we are looking in the history at WXY 3 waves towards the downside, then ABC 3 waves towards the upside. Therefore, that brings us to a flat, expanding flat, as A, B, your wave B is higher than the start of this flat A, B, and a C. Your wave C should be 5 waves towards the downside. Now, we have already seen a 5 impulsive waves with a diagonal shape, of course, towards the downside. That means two things. The first, it might be that this is your 1, 2, 3, 4, 5. The second thing is that your wave C as an expanding flat has finished and it has turned it into a running flat. Of course, for more information about a running flat, how it becomes an expanding flat, how it becomes a running flat, you can see it in the description below in the educational videos. Now, if we want to take a much more closer, of course, if we are a bullish, then we are in a possible finished running flat. And the last videos of FET explains much more why now the possibility of bullish scenario is a little bit higher than before, because before we were, of course, more bearish. Because of this very strong downtrend as diagonal. So if we look here, we are looking to a 1, 2, 3, 4, and a 5 towards the upside. So it is an impulse. We were before very bearish. Once we hit the 886 and we saw a retracement towards the downside, we were still not sure, of course, if this is a bullish or bearish, because we need to get higher than this price, and this is exactly what we got. After this, we are looking to a wave 5 here with 1, 2, 3, 4, and preferably still to finish a wave 5 towards the upside. In that case, your impulse will finish as 1, 2, 3, 4, 5, extended wave 5. Your wave 5 is longer than wave 3. However, your wave 3 is longer than your wave 1, which is perfect for Elliott Wave theory. Now, in that case scenario, we have two still options where we can see a 1, a 2, 3, 4, 5, or an A, B, and a C as a zigzag, because a zigzag can mimic, of course, an impulse with an impulsive wave A, and then B and a C towards the upside. However, your wave C will reach only the 1-to-1 fib level, rather the 1.618 for the impulse as a wave 3. If we take a look to the 1 hour chart, closer to that area, the last video we were talking about, this area here. Of course, the last videos, it was about this area where we still very, very bearish because we didn't got any impulse indication. Once we have reached higher high than this one, then we got a 1, 2, 3, 4, 5. That is perfect scenario for an impulse. Your wave 5 is finishing with an ending diagonal, as explained also in the last video. We were exactly here, and we were talking that we're gonna have a wave of 4 exactly in this pattern, and this is exactly what it has worked. So make sure always to keep updated with this channel, because we update always step by step. And here we go, we have hit our target here. Now, of course, we have still one more target towards the upside to finish this wave 5 and this wave 1, or wave A. In this case scenario, of course, again, to recap, we have, of course, a finished wave 1 or a finished wave A once we get our last lag here, right? If we have finished a wave 1, we want to see 3 waves towards the downside as a wave 2, and then move towards the upside, very high, of course, for a wave 3. If we are in a zigzag for a wave A, then of course the same thing. We're gonna see 3 waves towards the downside and move again towards the upside, but this time only to the 1-to-1 fib level for a wave C. In order to trade this safely and to double your profit and minimize your risk, you need, of course, to watch again the educational video how to trade Elliott Waves. In case we hit here the 1-to-1 fib level, it is much more likely that we're gonna have a retracement. So it is preferably, of course, to take some part of your profit here. If you are corrective in 3 wave, then of course you want to move on with your trade. If you have 5 waves towards the downside, it is much more preferably that you stop loss here. In case, of course, you are corrective and you want to move higher, then you are looking, of course, for higher prices at 1.618 for your wave 3, of course, and then finishing, of course, part of your TP2 here. Then, of course, retracement for wave 4 and again wave 5. In that case, of course, you can double your profit in an impulse and be less risky. So to lose, of course, your portfolio, where you can, of course, even double, trade several waves in an impulse, right? So basically, this is it. To recap again, so we have a wave 1. We are still looking for a small wave 5 to finish those 2 scenarios, zigzag and impulse, which both looking for 3 waves towards the downside. By all means, we are looking a little bit for higher prices and then move 3 waves towards the downside, and from there, of course, moving up. Preferably that we hit for a wave 2 the 0.618 and the 0.78 fib level. This is the most common target for a wave 2, while wave B can be even higher. So this could be also an indication if you are much more possible in a wave B, where you see your wave B finishes in between the 0.35 and 0.5, or your wave 2 finishing by the green box here. However, the wave 2 is also possible to finish in this level, but it is less common. Thank you for watching. Thank you for your like and your comment for this video, and see you in the next one. Bye bye.